picture this nightmare scenario. You wake up one morning to the news that your bank is collapsed overnight. Your savings, your checking account, all of your hard-earned money, all gone in an instant. Well, sound scary? Well, it should. If you're doing your banking with an online bank, your deposits may be at risk. But here's the good news. There's a federal safety net in place to prevent this very situation. It's called FDIC Insurance. You've probably seen those signs on the bank door. And today we're going to unpack exactly what it is, how it works, and why it lets you sleep soundly at night knowing your money is protected.
Welcome to the Ask Ralph podcast. We're listening to an experienced financial professional with over 30 years of experience can help you make sense of confusing questions, current headlines, and industry trends about taxes, small business, financial decision-making, investment strategies, and even the art of proper budgeting. Ask Ralph makes the complex simple by sharing his real-world knowledge from a Christian perspective with all things financial. Now here's your host, Ralph Estep Jr.
In the wake of bank failures during the Great Depression, the Federal Deposit Insurance Corporation, or FDIC as it's called, was born. It was in 1933. Its mission was to maintain stability and public confidence in our nation's banking system. Fast forward today, and the FDIC is more relevant than ever. In just the past few years, and a lot of people don't know this, we've seen over a dozen bank failures. From the high-profile collapse of Silicon Valley Bank to smaller community banks. But here's the amazing part. Not a single penny of insured deposits was lost. The FDIC delivered on its promise to protect the hard-earned money of American depositors just like you and me. And that's what we're going to explore today. How this incredible institution works behind the scenes to safeguard your cash even in times of economic uncertainty. So buckle up because we're about to embark on a fascinating journey into the world of deposit insurance. Well, welcome back, my financially savvy friends, to another eye-opening episode of the podcast that dares to tackle the intersection of faith and finance. Not many podcasts do that, but you've tuned into the right one. I'm your host, and I couldn't be more excited to dive into today's topic with you. We're talking about the unsung hero of the banking world, namely the FDIC. Now, I know you might be thinking, insurance, really, Ralph? This is of no interest to me. Sounds as exciting as watching paint dry. But trust me, folks, this stuff matters. It's the very backbone of our banking system, the guardian angel watching over your hard-earned savings. So grab a notepad because we're about to uncover some serious financial wisdom that will empower you to make smart choices with your money. But first, let's take a quick moment to reflect on our last episode. We tackled the daunting topic of retirement planning, and I shared some practical strategies to help you prepare for those golden years through the lens of your faith. We talked about the importance of starting early, diversifying your investments, and trusting in God's provision every step of the way. If you haven't checked it out yet, I highly recommend giving it a listen. Might just change the way you think about your financial future. And speaking of future, we've got an exciting episode lined up for you tomorrow. We're going to be pulling back the curtain on the hidden cost of home ownership that nobody wants to talk about. Buying a home is the American dream, right? But it comes with its fair share of surprise expenses that can quickly drain your bank account if you're not prepared. So make sure you tune in tomorrow as we reveal the true cost of being a homeowner and share some tips to help you budget like a boss. But for now, let's focus on the matter at hand. That's namely FDIC Insurance. You know, as Christians, we're called to be wise stewards of the resources God has entrusted to us. And part of that stewardship is taking prudent steps to protect our money. I love the way the Bible puts it in the book of Proverbs, chapter 27, verse 12. It says this, "The prudent see danger and take refuge, but the simple keep going and pay the penalty." Don't be simple, folks. In the context of banking, FDIC Insurance is that refuge. It's a way to safeguard your deposits against the danger of bank failures. So as we explore this topic today, keep that biblical wisdom in mind. We're not just talking about a government program. We're talking about a powerful tool that helps us faithfully manage the blessings God has given us. All right, well, let's get down to brass tacks, as they say. What exactly is FDIC Insurance and how does it work? Well, folks, in simple terms, it's a government-backed program that protects your money in the event that your bank fails. If you got money in a checking account, if you got money in a savings account, how about a certificate of deposit? At an FDIC insured bank, you're automatically covered up to $250,000 per depositor, per bank, per ownership category. So let's break that down. The per depositor part means that your coverage is based on who owns the account. If you've got a joint account with your spouse, you're each insured up to $250,000 for a total of $500,000 in coverage. The per bank part means that if you've got accounts at multiple banks, you're covered up to $250,000 at each bank. And the per ownership category part gets a little tricky. But basically it means that the different types of accounts like an individual account, joint account, retirement accounts are each insured separately. Now you might be thinking, Ralph, $250,000, that's a lot of money. I don't have anything like that. And that's okay. The vast majority of Americans are fully covered by FDIC insurance. In fact, according to the latest data from the FDIC, the median deposit account balance is just $5,500. So for most of us, FDIC insurance provides more than enough protection to sleep soundly at night. But here's the thing. Bank failures do happen. They're rare, but they're not unheard of. In fact, since the FDIC was founded in 1933, there have been over 3,500 bank failures in the United States. That's right, you heard me right. 3,500 failures. The vast majority of those happened during the savings and loan crisis of the 1980s and early 1990s, when more than 1,000 banks went under. But even in recent years, we've seen a handful of high-profile collapses, like the failure of Washington Mutual in 2008, which was the largest bank failure in U.S. history. So you might be asking, Ralph, what happens when a bank fails? That's where the FDIC springs into action. Their job is to step in and make sure that the depositors get their money back as quickly and seamlessly as possible. The truth is, folks, in most cases, the FDIC will arrange for another bank to take over the failed bank's deposits and their customers. You'll barely even notice a difference. The checks will still clear, the debit cards will still work, and their money will still be accessible. But there are rare cases when the FDIC can't find another bank to take over. They'll cut checks directly to depositors for the amount of their insured deposits. This process usually happens within a few days of bank failure, so you're not left hanging on for long. Now I know what some of you might be thinking. That's great for traditional brick-and-mortar banks, but what about online banks? What people are doing these? Are they covered too, Ralph? The answer is a resounding yes. But here's a caveat. As long as the online bank is FDIC insured, your money is just as safe there as it is in a physical branch. In fact, many online banks are actually able to offer higher interest rates and lower fees than traditional banks precisely because they don't have the overhead cost of maintaining physical branches. So if you're looking to earn a little extra on your savings, an online bank might be a great option to consider. But here's the key. Always make sure that any bank you're considering, whether online or brick and mortar, is FDIC insured. You can't just assume that it is. Take a minute to double check the FDIC's website or look for that FDIC logo on the bank's website or marketing materials. It's a small step that can make a big difference in protecting your money. And while we're on the subject of protecting your money, let's talk about what to do if you've got more than $250,000 in the bank. First of all, that's awesome. It's a nice problem to have, congratulations. But it does mean you'll need to take a few extra steps to make sure all of your money is fully insured. Now, one option is to spread your money out across multiple banks, ensuring that you don't have more than $250,000 at any one institution. Another option is the possibility of opening accounts in different ownership categories. For example, you could have an individual account, a joint account with your spouse, and a retirement account. Each would be insured separately up to $250,000. And here's a pro tip. If you're in a situation where you have a large sum of money you need to deposit temporarily, let's say you sell your house or something like that, you can use what's called the Certificate of Deposit Account Registry Service. That's CDARS. This allows you to spread your money across multiple banks while still working with a single institution and receiving a single statement. It's a convenient way to ensure that all your money is fully insured, even if it exceeds that $250,000 limit. So let's talk about some actionable steps. I always like to give you actionable steps. And number one, verify FDIC insurance on all of your bank accounts. Use the FDIC's Bank Find tool or look for the FDIC logo. If your total deposit exceeds $250,000, Open accounts at multiple banks to maximize insurance coverage. Number 2, consider CDARS that we talked about to easily spread large deposits across banks. Talk to your bank and ask them what's available. Number 3, a lot of people don't think about this. Maintain current records of your accounts and beneficiaries in case you need to file an insurance claim. You don't want to rely on our online banking system. It's one of the reasons that I talk about it in one of my previous podcast episodes. It's a good idea to print out those statements or store those off of the bank's site. And number 4, before switching banks, especially online ones, confirm they have active FDIC insurance coverage. It only takes a few seconds and it can provide you with a ton of peace of mind. My friends, I hope this overview has shown that FDIC insurance is far from boring. It's downright empowering. Know that your money is safe up to $250,000 in the unlikely event of bank fails, so there really is no need to stress. The FDIC has successfully protected depositors since the Great Depression. They've got your back. Now you've got the knowledge and action steps to keep your hard-earned money secure. Here's a reminder. Visit AskRalphPodcast.com to join our community of wise money managers. When we support each other, we can master our finances with confidence and enrich our faith. Well, stay tuned for more financial wisdom from a Christian perspective, and God bless you today.
Thank you for joining us on the Ask Ralph podcast. And with a simple click to subscribe, we'll invite you back to our next episode. And remember, financial issues don't have to be complicated. Just ask Ralph. The information contained in this episode of Ask Ralph is based on data available as of the date of its release. Saggio Accounting Plus and Ask Ralph Media, Inc. is under no obligation to update this content if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances, and any information provided is not to be considered as financial, tax, or legal advice. Please consult your tax advisor or attorney before acting on any material covered.